The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show just slightly different today. I got to get a few things off of my proverbial chest, as they say. The first one we want to take a look at is the German Bund. You'll notice here that it's made that 135 pattern that we liked, that we got from Roy Longstreet and his son Bill. That tells you if these bonds keep going higher above, right now we're trading at roughly 166 in the September bond, and if we get above 166.30, that will tell us that that pattern has failed, and that they do fail, as we do know. And we'll be talking about that in just a moment. The next one we want to look at here is the FTSE, because if you remember, there was a holiday in the UK yesterday, and you'll notice that it came off the double bottom. Hasn't really exploded much. It's actually only up about 60 points, which isn't very much, but it's going to be interesting to see, how it unfolds here. Okay, now let me walk through what I did over the weekend, folks. I think it's important enough. It's important to me, so let's make it important to everybody else. Okay, here's the main chart that I wanted to go over with you, and just to show you what we were looking at. This is the reason. You'll notice that this is from 1987, and I'm not saying this is a crash scenario or not. I'm just saying the pattern is correct and the aspects are correct. That's all I'm saying. I'm not saying there's a crash in here. Anyway, you'll notice that the 5-planet high came in on August the 25th. That was harmonic convergence. That was on every newspaper in the world. In fact, they were calling the Mayan calendar the end of the world and all that stuff. The market broke down into September the 25th, which was a solar eclipse. It rallied into October the 2nd, which was a Venus squared Uranus, and then the market went down. What we've done this year, it's exactly the same. We made a high on the 15th of July. We came down into August the 5th. We rallied up into this aspect that we had hitting yesterday, which was the 26th of October, 26th of August, and it was a Venus trine, which is 120 degrees. So that timing is all set up. Now, the reason for the trade was when the S&P was trading at 2940, it was at a 61% retracement of the high that it made back on July the 15th, and it was 38 trading days from high to high. Now, the aspect comes in yesterday. It only has a one-day orb, folks. In other words, if it doesn't start down today, this is all baloney, and that's the way it goes. But let me go through a couple of things to show you just basically, what we were looking at. This was a lot of things that were happening. Hold on just a second. I want to get this out here. And we have a lot of things that are, where's the aspects at? Oh, shut the front door. Here they are. Just a second here. Here's why the timing is so very, very important. Let's just get this up here. We'll be able to see it. The one on the left is 1987. The one on the right is 2019. The day was yesterday, so it's either one day off or it's no good. And that's the bottom line. Whether that's going to be the case or not, I don't know. It also would mean that the Bradley model may have inverted, and maybe we're going to go up in a new high ground. But, folks, if you look at all of those charts that were in my newsletter, it's not saying that. I mean, the market's rallying a little bit, but it's doing it with about 100 stocks. I mean, you're not seeing any rally like this in the New York Stock Exchange or stuff like that. It's the NASDAQ. The NASDAQ jumps 50 points if somebody says, gee, it looks like it's higher. So that's the main thing. So keep in mind that's what we're looking at to see whether these things are correct. There are a lot of other things that I don't want to go in, to all of them, because it's not that important, because its main thing is that the cycle stuff is coming together, all at the same time. So that's let me just bring this thing about the harmonic convergence up. This comes out of my book, Astro-cycles, the Trader's Viewpoint. And this harmonic convergence, this was the Mayan calendar, and they said it was the end of the world. It was actually not. It was the top of the stock market. It was also the day that George Lindsay, the fellow that Three Peaks in a Domed House, he passed away on that day. He'd been a regular on Louis Rukeyser for many years. But we'll see here. You'll notice there was Mars 120 degrees Jupiter. Well, we have Venus 120 degrees Uranus. So we'll see. We got a question here from someone possibly. Okay. All right. Mr. Z is asking, does this rally extend to 2890? Tell you no. The 2897 means nothing, Mr. Z. The number that means something, it's just too high. It's too far up there. That's 2940. If we get above that, then that's telling you you dropped 130 handles and you come back, almost 100 handles. 90, you came back 80 handles. So that really is all. It's a time thing now, Mr. Z. It's time. It has nothing to do with price now. Well, above 2715 is where we call it quits, and we sold at 2740. Oh, Larry, stop it. 2940 was the 61% retracement. We hit it 6 times, folks. We showed that a million times. We don't want to do that again. Then it dropped from 2940 all the way down to 2810, which was a perfect 78% retracement. We did it exactly on the NASDAQ, and we did it exactly on the S&P. Sunday night, that's where it was trading when it opened. And it stayed there for an hour or two, and then away it went with the tweets and all the other stuff. Okay? So that was easy to see. But the question is, why did it come back this quickly? And so what we did yesterday is to see how bad did it come back quickly. Well, it was only a few stocks that were doing it, but the few stocks are running the market. So it's a time thing. It starts down today, or this is no good. And that's it. That means it's almost got to close lower. And look how high we are. Well, this has changed a lot, but that's the main thing of what we're watching. So I hope that believe me, I have a lot of emotionalism tied up with this because I did so much on it, and I really felt strongly that that's what it is, and it looked great, and some people made some serious money off of it, but it might be wrong, and that's the bottom line. Hey, this is the same thing that I was doing in 1987 when that market was trading at on August the 25th. I'd been on the show that week at FNN in Financial News Network in Los Angeles, WKHY, and I was with Bill Griffith and Ron Insana and oh my gosh, I can't even think of her name. Oh dear. I'm talking too fast. Anyway, we were there and I was on the show and I said the stock market tops here, and I told Bill that sometime in October we would be down more than 300 points in the Dow. Remember, that was more than 10% because the Dow was trading at 2,700. And the reason why I came up with that number was it wasn't Elaine Garzarelli. It was Sue, what's her last name? Come on, guys. Sue Herrera. No, I don't know if Elaine's still doing this or not. I haven't heard from her. Neither has, I'll have to find out if Elaine, she's a good friend of Arch Crawford's. Anyway, get back to this. The reason why I said the market would be down more than 3 points, 300 points, is because the biggest drop had been 191. Multiply 191 times 1.618.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, let me get back here. We'll take a quick look here at the Dow Jones Industrial Average to give you an idea. You see the high was way back there, 27,000. We rallied for 2 weeks up to that 61% retracement, 26,400. We're still 400 points below that level. We just took out the 61% retracement of that low. But if you look at this chart, you can see the importance of that bottom when it gapped down Sunday night. I mean, my goodness, look at that. There's beautiful 135 pattern. The cycle is perfect. I mean, it was set up, really nicely. Now we're in a 2-day rally, but you can see this is still bearish longer term, but that doesn't mean anything if the market wants to continue to rally. That's why it's going to be interesting to see if we are going to says we don't have any sound. Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. The chicken has landed. Okay, good. The chicken's in the pot. The eagle's landed. Okay, thank you very much. Okay, anyway, take a look at that Dow. You can see that it is, the Dow is lagging the market, as is the Russell. So that's neither here nor there. We've got another market that is screaming. So let's just get it up and take a look at it, folks. If you like Fibonacci numbers and you like A, B, C, D. Hold on just a second here. Mr. Z is saying he's long the British pound. I think the British pound, I'm very bullish. I sent a special video out on the on the British pound. Wow. Time out. I sent a special video out on the British pound versus the U.S. dollar last night because it looks so bullish. We're trading pretty close to 123. It looks like it wants to go higher. There'll be some resistance at 123.50, I believe, Mr. Z, but we'll see if it gets much above that. But it looks pretty good. But the one that's really got my interest right now, and I don't know where it's trading, but if you'll take a look here, this is silver going over the last 3 months, folks. This is the ABCD pattern. You look up there in the top of that box where it says 1.618. Okay, that number is 17.99. I don't know what the high in silver's been today, but 17.99 is where the pedal meets the metal. So keep a close eye on that. I remember when that stuff was down around $14, we always said, that was a good buy for silver, to buy the silver rounds. They've moved up $4. So that's worked relatively well. Unfortunately, I did get along the futures in that because I didn't want to take the extra risk, but that's neither here nor there. So could someone tell me the high so far in the silver, please? I believe it's September silver. That is spot silver. 02 has been the high. Thank you very much, Mr. Marshall. And that ought to be it. I don't know where it is trading now, but I put a stop at 08. I wouldn't risk more than 8 cents in that, but it's interesting here that it's right at that level. Fact is, the safest trade, folks, is let's scratch that. The safest trade is wait. If it closes lower, then you know exactly where you are, because that 1.618 number is 1801, and it's 97 now. Okay, your risk is 7 cents. There you go. That's a 7 cent risk. You can't don't get any easier than that. So we'll see. Oh, Ruby's asking us to take a look at cocoa, coffee, and how about the sugar? Yeah, we got to look at the sugar too. Let's get these up here. We'll do these right now. Let's start off with cocoa, the sweet here, and you'll notice here, we had some really nice patterns in here. Really strong resistance was up at that 61% retracement, 25.65. We backed off all the way down to 21.15. We've held it. Here again, that's a 78% retracement of the low on September, and it's also a retracement of the low in January. Folks, look at that January low, look at the September, October low, and look at the low we made last week. That's the same pattern that we saw in the Dow Jones Sunday night. Exactly the same pattern. That's exactly what it is. So pay attention to that. It should hold 2100. If cocoa doesn't hold 2100, folks, hot chocolate is going to be on sale. Let's put it that way. All right, the next one we're going to look at is sugar, the sweet, and we already know that we've talked about this $11 a pound here in sugar, and as you can see here, there's a big double bottom down in this area. Whether that holds it or not, remains to be seen. But remember, folks, what we're looking at here hold on one second. What we're looking at with the futures is the fact that we have that CRB index is making this big bottom down in this area right here. You'll be able to see it. We're getting pretty close. So we're down about 370. I don't know where we're trading today, but once that's completed, all of these commodities should get some relief, because it's been a really strong move down, and you should be able to profit from that, I would think. Okay, we covered the sugar, and now we want to go to coffee. And you'll see coffee's got a lot of potential. It really does here. Hold on. Let's take a look at this one here. As long as coffee can stay above 93, you'll notice it's that exactly 78% level. We hit 93. We rallied all the way up to 97.5. I believe we're trading around 96 here this morning. So that's another one that looks real interesting. So that's coffee, cocoa, sugar. And there are major bottoms possibly in here, but you certainly don't have to risk very much at these points. It's much better to buy them here than 4 weeks ago when they were making 61% retracements. So that's another one. We also should take a look at the hogs too, because I think sometime in the near future that the hogs might have some type of a bottom in here. But the thing we should remember here about the hogs, folks, is the fact that we're looking at a market that has been down for a long time, And in the midst of some of the most bullish news ever to hit that market, from February to April, it was a swine flu. There were no more hogs in the world. Bada bing, bada boom. How many times have I heard that story? But with all the stuff going on in the currencies and the metals and everything, it's really hard to try to focus on the livestock now, folks. The oil is at a real critical junction. It still has a slightly bearish bias. We talked about that. Also, let's just get that one up too, because that was an interesting one that we were watching. Hold on, let's get that up here. The crude oil is where it is, right here. Yeah. See, the reason why this crude oil has a bearish bias is because of the fact that we have this 135 pattern that is here, and we're trading right around 54 right now, so it's still heading down. It hasn't really given you any indication that it wants to turn. It has to get above 55.60 in the crude oil for the market to actually turn higher, because you're in a downtrend. You've got three lower tops. That's the 135 pattern. Each of those is a perfect high to high, high to high. It's a perfect relationship. 618, 786, 618. I mean, that's mother, God, and country stuff, folks, if you like numbers. And we like numbers, so that's it. So that's what we're going to be watching here this morning. So we'll be looking on. If you have any questions, folks, it's 877-927-6648. And we get back from the break, we're going to talk a little bit about the FANG stocks, because I think is telling us a big story.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to spend just a moment here to go over the British pound with our good friend Mr. Z, because I believe that it's very, very critical where we're sitting right now in the British pound. If you'll give me a second here, I can get this up here to show you what I was referring to. Oh, dear me, dear me, dear me. Well, here we are right here. We got two of them here we want to go over. This is the shorter term one. I wanted to give you an idea of what's looking at. You see here, since the 11th, we made the really nice bottom. The buy signal was on the Gartley on the 20th, a perfect 120.70 that went to 120.65, rallied 200 handles, and you'll see today we made a higher high here at 123.10. This is why this is so important. Is the reasoning behind this is if you'll take a look at this chart on a 4-hour chart, this is going to be real interesting because this is going to be the key point if we break out here in the British pound. Let me get this up here. Okay, now this is a 4-hour chart. Marshall, if I could hire an assistant, I think I would do it with you. Good job, buddy. Right on. Over the last 5 trading days, we've made a 3 drive to a top pattern. That's important, but look where it's at, folks. It's at the 38% retracement of the July high, and if you go back and look at the move between June 18th from June 18th into the 25th, that's a similar move that we've had here. They're up. The first one was 270 points, and this one is 290 points. I wouldn't be long to British pound here if they let me trade for free. This is a really important spot. Now, maybe it blows through. If we get through 123.10, then I would say yes, but by golly, right now, to me, it looks like it's going to be interesting. So let's watch that. It's very, very important to keep an eye on that. Is my guess. So that's the main thing. Okay, someone asked a question. Mr. Z, did that help you at all? I don't know if it is, but we're right at that. This is the proverbial moment of truth. We're up 290 pips, just like we were in July. We're right at the 382. There's a 3 drive to a top pattern, and that's on a 4-hour chart. So that's taken 5 days to fill. So that's what we're watching here in the British pound. The U.S. dollar is still held up really well. The euro has backed off a little bit from that high we had at 111.85. And I believe that 111.65, and I think we'll probably be moving down into that area right now. So let me take a quick look here how the markets are opening here, because this is a really, really critical day here. That's what we want to see. We want to see the stock market continue to go higher here in a little bit, and we're going to see what we got here. Folks, if you remember here, when I was on last Thursday and Friday, I was talking about that importance of that number, and then the market broke on Thursday. The 2 key numbers we were looking at were 29.16 in the S&P. We're trading at 28.93, 22 handles below. The number on the NASDAQ was 76.85. We're trading substantially below that too. That tells you that this thing has a bearish bias. That's basically what it's telling. Don't look bearish right now, but that's what it's telling you. But this is the day right here. And now the time has come. So this is it. This is going to be the day, whether it's going to be happening or not. We'll have to do one thing at a time. Okay, let's move on here. Someone's asked me a question about that silver. Let me get it up here so I can see it and take a quick look at it. This is why it's so hard doing this show in the first hour of trading, because that's the most important part of the day for most people. So let's get this thing in. Now we were looking at 1802. Yeah, the high was 1802, and we're trading at 94. To me, I think that's probably a bearish sign, but whether it is or not, God only knows, and she's not trading today because she's recovering from the banking holiday that we had in Europe. Let me do this. Someone's asked me to do this, and that is to blow up the British pound so we can see it just a little bit differently here. Hold on here 1 second here. Okay. All right, Jimmy's asking a question here about interest rates, and this is where we're all going to get into trouble. The yield income issue, but wouldn't the pension funds be sitting on huge unexpected increase in value of the holdings due to historic? Yes, they are. They are sitting with big capital gains in the bonds. There's no question about it. They have turned the bond holders that like interest rates into bond speculators. That's the whole problem. If there is a problem, we'll see. We're going to be able to see. Yeah, we got a new moon coming up here on Saturday. Let me see, that is the 28th. We got a new moon, and I believe we have no. That's August. I've already got my September chart out here. I think that new moon is shucks. I already dropped it off. Doggone it. It's this week, so I believe it's Thursday because we've got Norm coming in. I believe on Thursday, so that should be it. Okay, that's what we're paying attention to, so let's just keep an eye on that and see what happens. All right, move on to the next one here. This is what I want to show you. Hold on just a second here, boys and girls. Did the chart for the British pound pop up showing the 3 drive to a top pattern blown up scale? Can someone tell me whether it did that? That's the main thing. Yes, okay, that's the pattern that Marshall was talking about. This took 5 days to complete. It's perfect ABCD, 123.10. If we get above 123.30 or 40, that's telling you that's probably going to go higher. If we go below 122.70, that's probably telling you you're getting ready, to move a little lower. So those are just a few of the ones that we're keeping an eye on right now. So let's keep an eye on that very, very closely. It's going to be a real interesting one to see if that holds, because it is so so very important. All righty. Okay, now silver has moved now 10 cents off the high. So if you did sell the silver somewhere around 17.95 or something, you don't want to risk it anything above 18.03 because it's that accurate. If it gets above that 1.618 level, folks, it's nebahachi. It means don't stand in front of it. So be very, very careful because these numbers are usually pretty accurate, and when they don't work, they don't work. So remember that. Very, very important. Regarding the interest rate scenario, it's on the news. This is the first time in the history of my watching CNBC that they're actually showing the yield spreads on the 2, the 5, the 10, and the 30-year. Every 4 or 5 minutes, you'll see what the yield spreads are doing. And that means there's a lot of players into the market. However, the open interest is not increasing in the notes and bonds. That's not a bullish sign, but there's still people that are covering shorts, and so that hasn't finished. But when they're finished, this is my 2 cents worth. This is what usually happens. There's going to be a vacuum in there because people are not going to want to buy it. That's what history says. Now, history can be wrong sometimes, and so we've got to remember that. But this is very, very interesting. So let's sort of pay attention to that as we walk through the trials of these things that we have today. But those are the main things that we're keeping an eye on. Okay, let's get to the FANG stock. Oh, my goodness, we've got a break coming up. When we get back from the break, I want to cover the FANG stocks because I think it's very important, and I did want to bring up the thing from 1987 again to show you this. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we've been asked to take a look at the TBT. We'll do this, and then what we'll do is we will go into the FANG stocks and take a look at those, what they're doing. The first one we want to look at is we'll look at this TBT here on a daily. Let's do it on the weekly chart first. Hold on one second here. This is where we were back on when these things stopped on the 25th of August. What I did was I put this out as a potential going short bonds. The TBT is the short side of the bonds. You'll notice the big ABCD pattern that is there from the 2015. The low at 2016 rallies up, and it comes down to where we are around 23. And my assumption was if you put a buy stop on the TBT at 25.20. In other words, it had to take out the previous week's high, and then you put a sell stop at the previous week's low, which would be 22, but it never has triggered. This buy stop is not triggered as of yet. The high was 24.80, so if it does trigger, then that would be something that could be a pretty good long-term investment. We do know that over a period of time, there has been a tiny bit of selling here in the TBT, because if we take a look at it here on the monthly basis, going back just to 2008 when it was trading at 300, and now we're trading at 23, that's what we call a drop in interest rates, folks. This is how they put the tax on the old people, by getting the price of the bonds way low and or high. Yeah, Yes, let's try the price of the bonds being very high, making interest rates very, very low. So anyway, let's remember that that's what we're looking at. The FANG stocks. Folks, when I looked at all this stuff over the weekend, I really spent a lot of time on all these things. And let's just take a look at some of these FANG stocks. They all look horrible. Let's just get the other one up here. First one we're going to be looking at here is Netflix. You'll see it's got another, looks like another 5% down until it reaches some type of a major bottom here. The next one we want to take a look at here is the Google. And believe me, the Google, it's certain. These are daily charts too, folks. You can see the clear ABCD down around 1085. I don't know if that's going to happen or not, but we'll need to watch these as they unfold. We're not at major bottoms. Look at the Amazon. You want to see a stock that looks absolutely terrible is Amazon. I mean, it's taken out those lows of last week. I wouldn't buy this. I mean, where's the last price on Amazon? Can someone tell me where we are? Have we already broken through that 78% level at 17? Is it below 1749 in the Amazon? Could somebody give me a quick update on that just to double check? Maybe yes, maybe no. 10.4, 10.4. 17, so it did bounce a little bit off that. Okay, good. All right, let's move on to the next one. Thanks, Dollar Bill. Appreciate that. Here's another one. Facebook also looking quite bearish. You'll notice here we have a target here about 162. It's trading at probably a little above 177. It looks like, and then finally the last of them, which will be the Apple. Looks it's the strongest of any of those, and it's still got a price objective that we're looking at somewhere around 187, if that's the case, if these things finally do turn over. But whether they do or not, remains to be seen, and we certainly don't know about that. Let's get to the euro here, because this was the same situation. Let me give you an idea here. This is the same pattern in the euro yesterday, Sunday night, that we're seeing in the British pound this morning. That's exactly the same pattern. This is a this is a 15-minute chart. The one on the pound was 240 minutes, 4 hours. So it's the same pattern. It's a perfect ABCD right at a 61% retracement. What we were doing with the British pound, it was a 3-drive pattern on a 4-hour at the 38% retracement, actually a little more bearish. So this tells us that the U.S. dollar might start to strengthen in here. So we're going to keep a very, very close eye on that as we go through these charts today. And let me double check to see if we're moving. Second, please. Sorry, folks. Give me a break here. I gotta take a drink. Hold on, please. All righty, let's move on here and see what we're doing with the markets here. We're having a 1 second here. All righty, good. We're still going higher in stocks. That's what we need to be doing, and that's neither here nor there. And what else we got? Let's see how the silver's acting, because I want to see if the silver is going to take out. If it gets above 1803, folks, you just can't stand in front of it because of the fact that it's that number is so powerful. Because once it goes through there, it could really be quite nasty. And we haven't quite done that yet, but we could certainly do that without any trouble. We're trading at 17.95 right now in the silver, so we'll do one or the other. We'll pay close attention to that as we look at things go through. We're now down to 22.85 now in the pound. That's down 25 handles, 25 points from the thing. So let's keep an eye on that. We'll watch this. Those key figures again on the NASDAQ and the S&P are 76.85. We're at 76.42 right now in the NASDAQ, and in the S&P it was 29.16. We're at 28.97. So those are going to be really interesting to watch very, very closely today. Let's 1 second, please. Wow. Okay, question about the bonds. Folks, we've been in a bear market in interest rates since August of '82, and that's been, 37 years? So someday this is going to turn. Whether it's going to turn in our lifetimes or not remains to be seen. But negative interest rates does not make is not that important, in my opinion. And the reason for that is the fact that you're looking at, it's something that just doesn't make any sense. I mean, I've never met anybody that said, yeah, here's my money and, I'll pay you to hold it for a year. I mean, that doesn't make any sense, but that's neither here nor there. So let's watch it as it unfolds here. Okay, I think the key today is to watch the gold and watch the silver and the gold. The gold is still trading. We're trading $20, $22 under the high. So if you're going to sell a metal, it's probably better to sell the gold rather than the silver, because you want to sell the weakest. So that's something that we might want to keep in mind. So that's neither here nor there on this one. So let's pay sort of a little bit of attention as we walk through some of these. The grain markets, they're really relatively quiet. We're still waiting for a potential to buy corn here, but we're quite a ways away yet in the corn market. But as we get closer to this, do you see a bounce in the soybean oil? Yes, we've had a pretty good rush. I'll just show you the chart here, Ruby, because it's oil was just about nearly as perfect as you could possibly get as far as a technical chart. We watched this several times, but look at the perfect ABCD that you have at the 61% retracement at 30.20. Now we're two handles below it. You see there's going to be strong support at 28.20 down here at the 78% level, but look how perfect that is. It's a perfect ABCD, right at 618. That's the Gartley pattern in itself. So pay close attention. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the overall market. The key numbers to watch today, folks, from a technicals perspective, are 76.85 in the NASDAQ and 29.16 in the S&P. This would confirm the trend up in that and make all of that work that I'd looked at astrology as negative. This is no more time left as today. It's got to start down today, or there's something certain. But if it does start down today, then we have some more information that will be quite important. Those dates of September the 3rd and October the 8th will not mean anything unless the market does start to go lower, because it has to fulfill the sequence of what we were watching happening over this last 8 or 9 trading days. We'll watch that very closely. The British pound and the someone's asked a question. The British pound and the euro did the different patterns on different the same pattern on different days. If you take a look here, this is a 4-hour chart on the British pound with a 3 drive to a top, and the one that we had on the euro was a 15-minute, which, you know, because it's a smaller time frame, did exactly the same thing. And we came down to the 61% retracement down there at 111. So far that is held. That's into the old high levels. A lot of support around 111 in the euro, if it can hold that level. So those are the main things. The key levels today, 29.16 in the S&P, closing below 28.72 would be a confirmation of the top. And whether that does that or not, it's so far away right now, you know, that it could easily miss it. But we'll keep a very, very close eye on it. So that's what we're watching here this morning. Oh, regarding the bonds got to get above 167 in September bonds to confirm that we've, we're still going to go higher in the bonds. So we'll have to wait and see. So that's what we're watching today. So live every day in an attitude of gratitude, and may God bless. And by the way, we will have Norman, who calls it to the minute Winsky, on Thursday. That's a day before we have a new moon.